Nii, tundub, et mikrofon töötab, kell on saanud 6, hakkame siis vaikselt meie üritusega ka pihta. Tervist kõigile investoritele ja ka teistele investeerimishuvilistele nii siin kui ka neile, kes siis meid veebi vahendusel kodudest jälgivad. Et päevakavast siis nii palju, et täna on meil selline harukordne võimalus, et külla on tulnud hetkel börsil raha kaasava Läti munatootja APF Holdings'i tegevjuht ja ka on meil siin olemas Enlight Research analüütik, kes siis mõlemad ettevõttest lähemalt räägivad ja ülevaate siis annavad. Esmalt siis tuleb ettevõtte tegevjuht Jurijs Adamovičs, räägib siis ettevõtte hetkeolukorrast, millised on tulevikuplaanid ja mida siis peale hakatakse peale IPO-t. Ja seejärel siis Enlight Research analüütik ja asutaja Mattias Wallander siis jagab siis enda leide, mida ta siis ettevõtet analüüsides on näinud. Ettevõtte siis IPO hetkel käimas on, saab seda märkida siis 30. oktoobrini ja siis ettevõtte kaasab börsilt 7 kuni 7,7 miljonit eurot, et hetkel veel investoritel see võimalus IPO-s osaleda on. Ka investor Toomas siis vaatas nii-öelda IPO-le peale ja oma mõtted ka eelmine nädal avaldas, et meile meeldis see, et ettevõte on kasumlik. Seda, ütleme, et First Northi puhul on see võib-olla isegi harukordne juhus, et ettevõttega kasumit teenib, et selle üle oli hea meel, aga tekkis ka ütleme siis mõningasi küsimusi, mida siis kavatseme ka nii-öelda siin küsimuste-vastuste voorus kõige lõpus ka ära küsida. Tänane siis ettekanded on inglise keeles, et hoiatan juba siin ette ära ja kindlasti olge siis aktiivsed, küsige küsimusi. Lõpus võtame siis kõik need ette. Workshopis saab ka esitada küsimusi, kes kodudes vaatavad, et seal on siis Q&A vorm eraldi olemas, et küsime ka siis kodudes olijate küsimused kindlasti ära. Aga nüüd ongi hea minna võib-olla siin inglise keele üle. So I would like to welcome APF Holdings'i CEO and large owner of the group and Jurijs Adamovičs to give his presentation.
Thank you. Good evening, ladies and gentlemen. And first of all, thanks very much to APF and investor Toomas for having the opportunity to be here tonight and address the community of investors here in Estonia tonight. So over the last 30 minutes or so, we'll go through the presentation of our IPO narrative. And it's essentially about two key metrics or two key things. It's about increasing our production output by 60%, and it's about quadruple increase in our profitability. And basically, while we go through this presentation, I will try to answer how we're going to achieve this, and most importantly, why we believe this is achievable. So we'll be happy to take your questions later on. And I also have my management team members here with us tonight. So let me introduce them. Herman Izdovgis, our group CEO, and Michael Skeziks, our group CFO. So, once we break up for drinks and foods, feel free to ask questions also in informal settings to every one of us. So, actually, when we meet Estonian investors, we quite often say that we are almost Estonian company. And this is true. This is true because our main production asset is actually located in the beautiful town of Aluksnes, which is exactly 15 kilometers from Estonian border. And ironically enough, when we started during the first year of operation, all of our feed was actually being shipped from Estonia. So there's quite a bit of Estonian element in our history. The group itself, it's essentially based around a Aluksnes poultry factory. We have very deep traditions. Actually, the factory itself was founded in 1961. So 2 years ago, we have celebrated 60th year anniversaries. And we actually have found in the local archives, we found a decision by the Committee of Union of Proletary at the time establishing the Aluksnes poultry factory. But for us as a team, the story started in 2016. So this was the year when current management has taken over this asset. And basically what we have taken over at that time was pretty much a abundant Soviet era infrastructure and one half completed modernization project. So I think over the last 5 years, APF Group has gone through quite a exciting transformational journey. And today we are third largest egg producer in the Baltics. And that is both in terms of output and also in terms of revenue. What you see now on the screen is a photo illustration of basically what the poultry used to be 60 years ago and how it looks now. Just to give you a bit of a flavor, oops, that wasn't me. Yeah. Just to give you a bit of a flavor, in early 60s, according to archives of that time, the factory employed just around 50 people, and they were producing from 500,000 to 3 million eggs per year. Now, today, we employ 54 people, and we produce 115 million eggs. So the increase in productivity is basically more than 30 times. And of course, all the modern technologies, they did not pass by the agriculture. What you see on the screen are our two most modern barns. They can pretty much be managed from your smartphone app. So everything related to feed supply, water supply, climate control, light dimming, regulation of biological daytime for the birds. It's all automated, and when there are mechanical faults, there is a push-up notification on engineer's screen which basically directs you go to this barn, that floor, shelf number, blah blah blah, and basically you identify the problem and fix it immediately. So the automation, the degree of automation in agriculture today is quite amazing. Some basic numbers at a glance. What we have today is we have a production capacity of 115 million eggs per year. We have an animal flock of 415,000 birds. We have 3 hen houses, of which one is enriched cage and 2 are barn houses or cage-free eggs, so to speak. We have our own feed mill production facility. We have our own egg sorting facility. And actually, as we speak, we are completing installation of a solar energy park, which will basically have enough capacity to supply the factory entirely during summer months with electricity. If we speak briefly of the key financials, then the revenue in 2022 was 11.2 million euros. EBITDA in 2022 was 2.1 million euros. So the EBITDA margin at the group level was roughly 19%. This year, actually, we're doing better than previous year. Revenue in first 6 months was 7 mil. And in first 6 months, we actually made the entire EBITDA of last year. In terms of product portfolio, well, similarly to most poultry companies, the product mix is rather simple. In our case, the core 3 products are enriched cage eggs, which still dominates the Baltic market, and about 80% of the production capacity produce cage eggs. We have barn eggs, and we also sell free-range eggs to the clients, but those we do not produce. We have a number of certified small farmers who produce it, and then it is packaged under our trademark and sold to supermarkets. We sell our products, our own trademark. We have 4 registered trademarks, and we also do private labels for major international chains. We actually do quite a bit of innovation as well. Actually, tonight our guests have a unique opportunity to taste the egg protein smoothie, which is a unique product for Baltic market. It was not existent before. So this is a product we produce with our Finnish partners in Finland from our eggs. It is now available in Rimi, Stockman, and Narvasen in 3 flavors: mango, apple, and orange. And the idea here is to basically test the market, test the hypothesis of volumes and sustainability of the margins, and then we gonna start producing it ourselves at our Aluksnes facility. Also, this year we've been the first FCMG or fast movable consumer good brand which kind of tried to merge the real and virtual sectors. Now, actually, in Estonian Rimi, you can buy a egg packaging with trademark the Chi game. You would notice a QR code on that packaging. You can scan it. That will guide you to App Store or Google Play. You'll download a educational and quite addictive game, which has some monetization elements embedded into it. And the idea here is, again, to test this on the Baltic markets. If it proves well, then roll it out on in all Europe markets on royalty fee basis as well. What is now shown on the screen are our current facilities, our key infrastructure. So this building here is the first hen house that we have completed and commissioned in early 2017. It's enriched cage. The other 2 are barn eggs. So basically, within the 2 barns, birds can move inside freely. They can fly between the floors. So it's a much higher standard facility. And actually, also the cost of one laying hen place in those last 2 barns is around 30% higher. So it's a much more capital intensive way of production. Also, just on a side note, to our own surprise, when the 3rd building was commissioned, we also happened to receive a bronze award from a Latvian Union of Architects in the industrial industrial business segment, which was indeed a surprise for us, and it probably hints that farmers also are capable of building something elegant. Very briefly about the management team. The management board of APF Holdings consists of 3 members. I've introduced to you Hermanis and Michaels. We actually, as a team, work together for 12 years now. We've done different projects together. What unites us all, we all come from finance and banking industry. We are former bankers. Michael has a long-standing career with banks and asset managers. Hermanis had top-level positions with SEB and Parex Bankas before. Myself, I'm still a part-time banker. I'm also a shareholder and non-executive chairman of Industra Bank in Latvia, which is a SME-focused bank. And also, in addition to my role at IPF, I also have taken up some social responsibility. For the last 2 years, I'm chairman of the Latvian Poultry Association. So we also on the top of the GR agenda when it comes to poultry industry. Continuing on the corporate governance, also a brief introduction of our supervisory board. The chairman of our supervisory board, I assume, might be quite known in capital market experts here in Estonia. He also is one of the co-founders and long-time leaders of Madara Cosmetics, which is also Nasdaq listed company. And I think as of today, Madara IPO is still the best performing Latvian IPO so far. Oldest deputy is Eva Berlaus, who is also a very well-known business lady in the Baltics. She is a managing partner of Sorainen Law Office, which is, I think, the largest law firm in the Baltic states. Miguel Jordao is a London-based investment banker who, before joining the board, was actually one consultant when we did a strategy project together with London Business School. Miguel is also quite engaged in agri-tech investments, and he does it in London and Oxford. And Jurijs Adamovičs is a professor of University of Agriculture, a long-time director of Institute of Biotechnology, and one of the most quoted researchers of feed production topics in the Baltics. Yep, sorry for the technical glitch. Yes, a few words about the legal structure of the group. In our case, the issuer and the company that is coming to the stock exchange is APF Holdings. APF Holdings employs all of the key personnel, all of the top management of the group, and it also acts as a holdco for the group companies. Basically, APF Holding holds 100% shares in 5 subsidiaries. The key element or the key company in the group is Aluksnes Putnuferma, which is our key asset, and this company is an owner of all land, real estate, equipment. Company called Aluksnes is essentially a facility operator, so all of the production employees, they are employed by Aluksnes, and Aluksnes has a service level agreement with Aluksnes Putnuferma. APF Trading is our wholesale house, or a trading arm, if you like. So basically, APF Trading has a framework agreement signed with all of the international retailers. So all of the B2B partnerships, relationships, key accounts are managed by APF Trading team. Preili Putna is a relatively new subsidiary established 2 years ago. Preili is a municipality located 150 kilometers from Aluksnes. And today on its balance sheet, it has 2 long-term rent agreements, 15 years each, for 2 very modern buildings, just recently completed. Actually, last week, Herman is commissioned together with local governor a second building. And basically, the idea here is that we're going to use Preili as our regional hub for growing pullets. So today we buy all young birds, predominantly from Poland. So the plan is that going forward, we want to grow the birds ourselves. And last but not least is a company called APF Energy. Yeah, this is also a relatively new company, 2 years young, so to speak. This company has acquired a few land plots in Aluksnes, just behind the factory. And the idea is that this company develops now 2 projects for us. One is biomethane production facility, and the second one is mineral fertilizer projects, of which I will say a few words later. So why the IPO? What do we want to achieve? Yes, I guess when it comes to our IPO and probably what differentiates us from perhaps some other issuers is that, you know, basically we are raising funds for a very specific time-bound investment project. And what we're going to do is the following. We're going to go from 3 barns to 5, which will allow us to increase our flock size from 415,000 birds to 665,000 birds, which in turn will allow us to boost the production capacity up to 180 million eggs per year. And if before that we were purchasing on average 280,000 pullets per year, now with installation of pullet rearing equipment, we'll be growing birds ourselves, and the installed capacity will be allowing us to grow to 150,000 birds. So we'll be able to meet most of the demand ourselves. Now on the screen, I'm showing you the aerial view of the key production facility in Aluksnes. What we have there is 32 hectares of land, and colored in green, you see basically the new buildings which we are going to construct post-IPO. So colored in green and numbered 8 are the 4th and 5th barn. And colored green and numbered 9 is the extension of sorting facility, because we will need more space to store the eggs. And also we're gonna put a liquid egg product equipment in that building. As you see, we have loads of land, and basically, I mean, obviously our growth story does not stop in 2025. The ambition and the plan is, and that's actually included in our 5-year strategy, is to continue to grow. And basically what we are completing now in Aluksnes is we're finalizing our environmental impact assessment procedure with the idea to have a government permit to increase production capacity up to 2 million birds here in Aluksnes in this particular location. Use of proceeds is, of course, one of the key sections of the prospects, and here I think we probably also differ from some other issues historically, that we are in a position to give a very exact budget for what we're going to do. So 5.6 million is going to be the cost to build each of the 2 barns. This number also includes acquisition of equipment and also the commissioning of it and installation, because in our business, installation of equipment is a pretty complicated project on its own merits. 1.7 million euros we're gonna invest in the equipment of pullet rearing or growing young birds. 2.9 million euros is going to be put in the expansion of the sorting facility, and 800,000 euros will be put in the purchase of egg product equipment. So the total estimated capex is 17 million, out of which 7 million is going to be raised via IPO. And we actually, as of today, we have offers from 3 largest banks in Latvia willing to finance up to 11 million of debt for us. Now, the other reason why we're in a position to give such an exact numbers now is also the fact that the company is benefiting from EU structural funds. We are a recipient of capex support from Ministry of Agriculture. And similarly to Estonia, basically to do that, you have to follow a public procurement process, right? And what it implies for us, basically that, all the selection, tendering, procurement was fully completed. All the prices are fixed. All the contracts are signed. All the construction permits are received. And literally, well, not the same day or next day after IPO, but within a week or 2 after IPO, our CEO and team on the ground basically can, put the shovel in and start construction works. So again, it's a very specific soundbound investment project which we are going to implement. So one of the most often asked questions that we receive from investors is, 60% increase sounds a lot. Why do you guys are so optimistic? What makes you believe that you'll be able to sell that much of a new product? And in order to answer that question, need to press harder. In order to answer that question, I'll allow myself, to give you a bit of a macro background. Now, what is important to understand that the egg, the chicken egg in particular, historically is, and long term is likely to remain the cheapest and the most affordable source of animal protein. It's just a matter of fact. Now, there is a consensus amongst various investment banks, and in this presentation we use Rabobank Research, which presented its paper to International Egg Commission. And basically the conclusion of their research is that in the next decade, global consumption of eggs will increase by at least 25%. Now, of course, one can argue that this is because of the demographics. It will not be evenly spread over the regions. Yes, that's true. And in the subsequent slides, I will show you what is actually happening in Europe. But before doing that, I also want to emphasize one very important peculiarity that relates to the poultry industry. Whenever investors or bankers, also for that matter, look into the poultry industry, and basically whenever you speak of animal production related subsectors of agriculture, one of the key production efficiency metrics is your feed conversion rate. Now, what that diagram is basically saying us, so basically if you would want to produce 1 kilo of beef meat and 1 kilo of egg mass, you would need to use 4 times less feed, right? And this also, to a very large extent, explains to us as the consumers also, why chicken meat is so much cheaper on the shelf. And this is also a reason that explains why, say, in Estonia and also in Latvia, poultry industry is the only subsector of agriculture that is not receiving direct subsidies. Milk producers, pork producers, they do receive direct subsidies. We don't, because historically this industry has proven that they can exist without direct support from the state. Now, this slide is actually the most important in understanding, how we're gonna accommodate or how we're gonna sell off the 60% increased production output. I'm sure you all, as consumers of eggs, have heard it. All major international retail chains in the Baltics and also in Europe at large, they have all came up with the statement that starting year 2025, they will not be putting cage-reared egg on their shelves. Now that's a massive, fundamental change for the industry, and it's even more so because if we look at the Baltics in particular, in Estonia, actually 82% of production capacity or infrastructure is cage egg. In Lithuania, it's 80%, and in Latvia, it's 78%. So, there's still a massive underinvestment, to fulfill that target. So basically, what we did, obviously in our industry, if you are a producer, especially a producer, a food producer on industrial scale, it's quite difficult for you to hide from your competitors what you are planning to do, because if you are planning a construction, you need construction permit, you need a consent from environmental authorities. So it's pretty much, public knowledge. So we have, our understanding of what other market players are doing. Then we have also used Eurostat market data. And the good news about poultry industry that you have loads of data, in different sets, country by country. And we also have used Nielsen IQ data, which is a US-based retail analytics firms, and we buy their reports on quarterly basis, as all producers present in retailers do. So basically what we did, we have calculated what is going to be the shortage of cage-free egg in the Baltic markets in year 2025. And the number is 363 million. Now, that's a very substantial shortage of cage-free eggs. On the other hand, with 2 additional barns, we're going to bring only 73 million of additional cage-free egg to the market. So, which is actually only 1/5 of the shortfall. And basically, this is basically what makes us quite comfortable that we are actually taking it on a rather conservative or a cautious side, and this gives us as a management team a very solid comfort. We don't expect any problems whatsoever in selling this additional product volumes. Now, the situation is actually not much different if we look at Europe, at European Union member states at large. The same transition to cage-free is happening in all Europe as well. There are some countries like Germany, for example, which by a decision of the parliament have forbidden cage production already. Say if we look on countries like France or Italy, in these countries from 50 to 60% is still cage egg production. So the change is happening, but it's not happening at the pace lawmakers or politicians would expect it. And the other important consideration is that European Union historically was and is a net egg importer, i.e. Europe consumes much more egg than it produces, and which is also a very good additional growth potential for APF. Now, what you have on the screen now is basically in a numerical form. You basically can see which of the European countries are the key egg importers and egg exporters. Sorry, I'm bad with this remote. Yeah, so basically, the next section will be about the shareholder value that we as a team and as a company are going to create for our investors. Sorry, I'm probably bad with technology. Yep. So basically, what I want to emphasize here is, and I think it's very important for potential investors, for people who want to put their money, their personal money in this industry. What is important to understand that obviously for us, one of the key assets is flock, the animals, right? And in our case, the birds, the rearing hens, their useful production cycle, depending on the breed, is from 16 to 18 months. And then what happens as a producer, you would encounter or have 2 to 3 months when you continue to have a very substantial fixed cost base, but you don't have any incoming cash flow. Why is that? It's because the replacement of the flock, in this scale of the farm, is a special operation lasting for 2 weeks. Then you need additional 4 weeks to wash, disinfect, wash again. And then you need another 2 weeks to populate a new flock in. And the birds, when they come to the farm, they are 14 to 16 weeks old, and they need another few weeks, to arrive at optimal egg rearing rate. So yeah, basically what it means for any producer is that you have this 2-3 months, depending on the production cycle, this basically gap of incoming cash flow. What it means that if you have only one farm or one hen house, your business cannot be sustainable, because 1 year you'll be making money, the next year you'll be losing money because of the flock replacement. And basically what it means for us is that for us, in order to become profitable, we needed to go to 3 hen houses, because only by having 3 houses, we were in a position to guarantee to our clients that they will be getting a stable amount of product every year on the calendar basis. Now, luckily, APF was able to arrive at that point in 2021. And since 2021, we have 3 barns in place, and we are in a position to guarantee a stable amount of product to our clients. Now, the other important consideration is that in the previous investment phases, we have made a very substantial investment in the basic infrastructure. I mentioned to you before that we have our own feed mill. The feed mill that we have now in Aluksnes has a capacity of producing 4 tons of feed per hour. Now, this will be sufficient to feed our birds living in 5 houses, so we don't need any additional investment here. Another good news is the sorting machines, and that's quite sophisticated electronical machinery. Each machine costs 2+ million euros. What we have in place now has a capacity to sort 96,000 eggs per hour. So again, here also we don't need any extra investment in that machinery. We only need to sort of have more square meters to store the product. And basically what it means for investors and also for the company, that due to economies of scale, our margins will improve. And actually, our finance team has done a calculations which show to us that in barn 4 and 5, the cost to produce 1 egg will be 14% cheaper than in previous barns. So this is a result of economies of scales. Another important consideration is that will also is going to improve our margins. We'll also change the product mix, and the structure of the revenue will also change. Why? It's because now we have between 60 and 70% of the egg being produced in a cage-free, and that is sold at 25-30% premium. Once we complete this investment project, 4 out of 5 barns will be cage-free. So we'll be selling a higher margin product. So basically, all these factors combined, they contribute in a better margin for the company. Yeah, and this is basically to reiterate my point on the production. Yeah, I'll better step aside. Yeah, probably I have strong bio waves or something. Yeah, basically what you see here, this drop in production in 2021. So this is basically the result of this shortages of the production cyclogram. At the end of 2021, due to the COVID, we had some delays in commissioning our third barn. So all 3 barns were fully operational in year 2022. And you will see that also translates in pretty much similar production volumes this year and also for the year ahead. In year 24, the numbers are slightly better because of the improved cyclogram, and the investment phase that we are speaking of now. Basically, the 2 new barns will be built and commissioned in August, September next year. So in 2025, we'll be running at the maximum capacity, and we should be in a position to produce up to 180 million eggs. Now, this will also translate into the increased revenue from 11.2 million in year 2022 up to 25.6 million in year 2025. And of course, this should also yield a much better EBITDA from 2.5 mil in 22 to 8.5 million in 2025. The IPO offer itself, the subscription is on. It's happening as we speak. The closure of the subscription is next Monday, October the 30th. We are offering just above 1 million new shares, so it's a totally new issue. There is no sell down by existing shareholders, and as I've said before, all of the proceeds will go to fund our investment program. The free float will be just below 20%. And we are advised by our investment bank that this should be sufficient. Also looking at the previous IPO that happened in the Baltic market, so this should sort of give a sufficient level of depth and liquidity for this issue to be interesting for investors. Now, as a fast movable consumer goods company, and we are very well-known brand in Latvia, not that well known in Estonia yet, but we are under the impression that our loyal clients, our customers, they would want to own a share of us. So we have not put any limits. So 1 share is a limit, and it's basically the price per share is a price of 2 packs of eggs. So it's pretty much available to any retail investor. Yeah, and as I said before, the IPO target is 7 mil. The passporting by the regulator is approved for all 3 Baltic countries: Estonia, Latvia, Lithuania. And the first day of trading will be next Friday, November the 3rd. Next, and obviously important question for any shareholder, for any investor, is a dividend policy. We have a dividend policy approved by the shareholders. And what we have approved is a 50% or up to 50% payout starting 2026. The reason behind that, why after 26, is quite obviously that for the next years before that, all of the free cash flow will be invested into the increase in production capacity. And going forward, we felt that 50% is a good balance, that would allow the company to capitalize and monetize, further growth opportunities, but at the same time also should provide a solid stream of dividends to the shareholders. Now, a few words about APF energy project. What actually strikes me in a pleasant way that when we meet investors in Estonia, we feel that all of the ESG related matters are much dearer to Estonian investors' heart than we see elsewhere, and obviously ESG matters are also at the heart of our agenda. And for us, actually, APF energy projects are an integral part of our sustainability story. Now, for any poultry, pretty much for any agricultural animal-related businesses, your key byproduct is manure. Now, in our factory today, we already produce, so to speak, 50 50 tons of chicken manure per day. So far, we've been quite successful in selling all of that volumes to local farmers at the fertilizer and to biogas stations which are in the radius of 150 kilometers from us. But obviously, as APF grows, we need to have a sustainable solution of our own, right? And these projects are basically a integral part of it. So as I said before, there are two projects. One is a biomethane plant, and I'm sure you also have the same situation in Estonia, that green energy is booming. There are many international commodity traders, shopping around, willing to sign 10-year offtake contracts with local farmers and businesses generating organic waste. We are no exemption, and we are actually have entered into a letter of intent with one such large group, which is willing to co-invest in this project and take up 100% of the biomethane. And the same actually goes for the mineral fertilizer project. Even before the war, the payback period for this fertilizer project was relatively low. Now, since the war in Ukraine started and we experience as a region a much greater shortage of fertilizer, the prices have skyrocketed, and we have also signed a LOI with one large agri-trading group, which is ready to take off 100% of the fertilizer product. Now, what we emphasize in every investor presentation is that despite the fact that we have purchased land, despite the fact that there are more than 2 years of work behind this project, there's a separate team working on it. We have agreed with our advisors that for IPO purposes, we attach a zero price tag for this project, right? So it's priced at zero. It's not captured in the valuation at all. Valuation is based only on the core egg business. So this, if you like, is one of additional sort of potential upside elements that could materialize in the medium term for our shareholders. And ESG is actually at the heart of our agenda, and the chairman of our supervisory board, when he invested in the group and when he agreed to become chairman, he actually made it very straight that, Jurijs, I'll be chasing you. I want to make sure that we deliver on all of our ESG KPIs. So we have ESG strategy approved. It's available on our website. We have first ESG report also available on our website. So those investors, who want to be sure that they invest in a green, sustainable company are very much welcome to look it up and read that. And actually, it was 2 years ago, before this ESG topic, become this kind of very trendy, if I may say so. 2 years ago, we have approved a zero waste mentality program at our company. So we have lots of initiatives at every level of production of how we optimize usage of waste and how we consume less energy. So it's something that the team does in the everyday work as well. And just to wrap it up, that's going to be the last slide for me. I think what we offer to our investors is we are inviting you to invest in a established business. We are not a startup. We are established agri and food company, which has a very strong presence in its niche market. We're already number 3 in the Baltics. We have a very specific investment program that we are going to implement, and it's all justified by very strong demand and by very strong macro fundamentals. So I think we should be interested for those investors, looking to invest and buy into something that is stable, easily understandable. We don't produce black caviar. We produce, egg, which is the cheapest and the most affordable source of animal protein. So I would stop here. And I understand that questions will come later after Mattias does his presentation. So thank you very much for your attention.
Yes, thank you, Chairman of the Board, Jurijs Adamovičs, for that good presentation, and I think good overview what you will do with investors' money after IPO. But now, yes, I would like to ask Mattias here to give his presentation about the analysis that you made.
Okay, thank you. Well, why we're here tonight is to decide to subscribe or not subscribe. That's the question. And I think we need to look at the whole market sentiment to kind of decide this. I mean, we are in a tough market. And if the saying that when there's blood on the street, then you should buy, or when no one is interested, then probably you should buy. So I think, first of all, those who are here tonight should get the medal, because you have not lost hope. And I understand Estonian retail investors who have lost hope, because if you look at, let's say, the 5 or 10 latest IPO, basically the IPOs in Estonia since Enlight Green, it has been pretty much a disaster. And I guess the share prices are down like at least 50% on the average IPO in Estonia since Enlight Green. So coming from that background or history, the answer is, oh, I'm never going to subscribe to an IPO again. And I can understand that. But what I think is important to look at is this company different? I think the IPOs that we've seen in Estonia are pretty much basically startups and with no or very small revenues. And they have needed more money, I guess, 1 or 2 times since the IPO. APF is not that kind of case. APF is, if you look at the products, I mean, it's eggs. It's something that I think people will not cut down on. I mean, you probably cut down on organic avocados or organic tomatoes if they even sell them today. But you probably don't say, okay, now we can't afford eggs anymore. And I think that is the main concern today in the market. Will the demand fall off? Even though it hasn't fallen off yet, will it start to fall off? And I think with eggs, it's a very low risk that people will start cutting down on eggs. Right, so what is APF at the end of the day a bet on? It's like Jurijs said, it's a bet on the expansion. And it's not expansion into a market that doesn't exist. I think this demand figures, I mean, it's quite reliable. Again, it's not a startup market, it's eggs. So we know what the retail chains want to buy, and we know what consumers, the consumption of eggs per capita and so on. So there's very little, I think, uncertainty in the market. But the tough thing is, of course, that it's costly to build this capacity. And that's why they need the money. So they have built 3 farmhouses or 3 barns already. So I think that you can be pretty sure that, okay, they can expand and build another 2. And unless all of a sudden the hens start, hatching less eggs per hen, then yeah, if you believe that it will be the same productivity and of course the same egg price, then it's pretty much safe what they will sell. But the challenge again is to get the money to expand. And that's why the egg market is an oligopoly, like the gas stations and so on. It's so hard to enter because it's so expensive to build this capacity. But once you're there, then you will cut pretty nice margins. And the second question is then, if you believe in the demand, then is what will this expansion do to the margins and to the earnings? And I think that Jurijs mentioned the numbers. Our research shows that the margin could expand from about 15% in the first half this year. This is reported numbers, so it's not the forecast, to 17% in 2025 when the new capacity is up and running. So yeah, it looks like a big jump from 2022 when it was 8.5. But if you look at the half year this year, 15% to 17%, it's not that dramatic. Lastly, let's talk about valuation. At the IPO price, the EV/EBITDA is 6 times. I mean, this is what private market transactions used to be done at 5 or 6 times. So I think this is a bear market multiple. What we see as a fair value when the expansion is done is an EV/EBITDA multiple of 7.7. And the average of all these companies is about 8.7, 8.6. So I think for those who haven't lost the hope, this is a chance to get an IPO at a reasonable price for once. And you should compare them to more, I think, to Lithuanian food companies or food production companies like the dairy companies. And they are very stable at around 8. So it's not comparable to, I think, any Estonian company that you have listed here. And how have we reached this? Well, it's quite simple calculation. If we start with the IPO price, 681, and you put, we have our forecasted EBITDA, which again is based on the usual egg price and the productivity per hen. The EBITDA 2025 should be around 7.3, and then you take that times the multiple, you get the price of 894. That's our fair value. And if you use the 681, yeah, then it's 6 times EBITDA times the estimated EBITDA in 2025. So again, it's not rocket science. I think this one is quite easy to motivate or to show that there is a discount to peers. And that's quite nice to be able to do, because in a normal market you always have to stand and motivate, why you should buy, because the price of an IPO is usually at the top of the range, or quite high. I think I haven't seen this kind of pricing since Enlight Green. Enlight has, I think, made opinions on IPOs 3 times. The first one was Enlight Green, second one was Indexo in Latvia, and this is the third one. So we haven't actually had any opinion, which means that we probably didn't want to have any opinion on an IPO, except for these 3 cases. And I think also, if you look at Latvian IPO, we like in Estonia to think of Latvia as a bit more cowboy market in a way. But if you look at Latvian IPOs, Indexo, Virsi, Delfin Group, they are all trading around the IPO price. So compare those to Estonian IPOs, and you will see a big difference. So I think, obviously I'm positively biased. So if you're now positive, don't make up your mind until you wake up tomorrow. Cool off a bit. If it makes sense tomorrow, then you should consider it. And to finish, before we start with questions, I think that if you're going to making the decision to subscribe to a secondary offer in an Estonian IPO or a new IPO like this one, then that's really what you should compare to. So, thank you very much.
Thank you, Mattias, for that quick overview about the company and for in investors' eyes. I think investors can read the full report on your website as well. Yes.
Yes, that's true. It's free for everybody to download or read on enlightresearch.net. That's true.
So let's go on with our Q&A session, and I see one hand already up. So be active and ask questions at home as well. I know you have some.
Yeah, thanks. First question probably on a lot of investors' minds is why they should prefer you producing eggs compared to, for example, let's say banks or energy. I know the sectors are completely different, but for investors, what's important is profit, making money. Energy companies, banks are making money, you as well, but why should they choose you over other companies?
I can start and then you give. I think, yeah, banks, I mean, Estonian banks, what can you say, the best in the world. Return on equity, 35% LHV today? I mean, hats off. But and I'm not saying you should sell them, but it's probably as good as it gets. I mean, unless they're going to reach like 50% return on equity. So I think why I would say it's more of a diversification, or maybe you should start thinking that if you look at the LHV share price, it went up, and Coop, I think, I don't know, it's not much changed. I mean, this kind of return on equity should result in maybe 10-15% share price appreciation, but people are starting to price in that the deposits will be more expensive next year. So I think you should always think like 6 months ahead, and then maybe another sector will take over from banks. But yeah, banks are super strong now, so you can ride a wave, but maybe see what will be the next wave. Energy companies, I think that the interest rates and the energy price probably will hit energy companies next year as well. I mean, unfortunately, there's high interest rates, and the effects of that looks like it's going to last longer than we think. And then energy companies with all these investments and the high leverage that entails, it will be tougher and tougher to motivate the return on that. So I think that if you have an energy company that yields 5% and you can get 4.5% on a deposit, and going into next year, maybe you should look at another sector as well to diversify into.
I actually very much enjoyed this question. You just listed all of these 3 industries in which I have exposure. So to me, the answer to your question is that you don't have to choose between the 3. You need to combine them and make. Well, that's actually what I do. Honestly, I have in my portfolio FI sector. I have this, and I also have some exposure to energy business. So my own personal investment philosophy is invest in businesses and sectors which serve or satisfy the basic needs of the people or the businesses. And to answer your question, I wouldn't say that you need to choose between investing into a listed FI or a bank or an energy company or an agri-food producer. They all, on its merit, satisfy some basic needs. Banks is a sort of blood system of the economy. Animal protein. Basic desire for food, and heat, electricity, etc. Also our basic needs. So in my eyes, it's more of a balancing your portfolio with stocks that where the demand for the end product or service is guaranteed, and then you basically end up analyzing the quality of each particular issue or the company. Now the industry might be right, the product might be right, but then is the company delivering on it? That the management team has a track record and this kind of thing. So basically, in my eyes, it's I would keep all 3 industries, but just pick the right issues to invest into.
Good answers. Any more questions here?
So we've had quite a few IPOs recently, and there has been, let's say, a lack of interest. And even with Latvian companies, there have been some questions whether Latvians will actually activate, start subscribing. So how do you see, from your own personal experience, or are Latvians interested in your company, seeing as you are very much Latvian focused for now? It's your home market. So are Latvians interested? And as a follow-up question, do you have any ideas what you will do if you will not be able to reach your minimum target?
Sure. So there are two questions then. One is on the investors split. Actually, during the subscription period, we did quite a number of events also for the private banking and asset management teams of quite a few large banks. And well, I'm probably not allowed to throw names here, but at one of the events at a large Scandinavian bank, Aldis, our chairman of supervisory board, he said to the team, look, guys, at least for once, can you please bring more investors than Estonians do? Because it kind of looks odd that Estonians buy more of Latvian IPOs than that Latvian nationals do. Oddly enough, we are now 7-8 days down the road to subscription. Now we see that more than 2/3 of investors are of Latvian origin. The explanation to that, I think, is quite simple. It's because we are a very well-known consumer brand in Latvia, right? Also, the domestic markets for us is Baltics, right? But our brands or trademarks under which we sell, they're kind of a household names in Latvia, right? So, and I think that basically explains why we're sort of more appealing to Latvian retail investors, because I think it's kind of cool. You walk down the supermarket, you sort of see the pack of eggs, and you kind of say, oh, I actually one of the shareholders of this farm, and they grab that packaging. I think it's nice. So I think that explains why today we have more Latvian investors. But our advisors say that this can flip anytime, because Estonian investors, are probably more prudent because they are more experienced than Latvian business community or investor community. So this can change. My gut feeling today is that the split gonna be 50-50. But I would not be surprised if it's more skewed towards Latvian investors because of the brand recognition. Your second question was on what we're gonna do if we don't raise enough money. The answer is we still proceed with the construction, and then basically we will, based on how much money is going to be raised, we'll then decide, in what time horizon we'll execute it. As I've said before, we have EU funding approved for this project. That implies that the implementation of the projects is time-bound. And if we don't want to lose it, the EU support, we have to execute the projects. Another actually good piece of news was it went public yesterday. On Friday last week, we have received a official confirmation from Ministry of Agriculture that we are receiving additional €2 million subsidy, capex subsidy for our program. That was not planned. It was not captured in the prospectus. It's not captured in Enlight Research. So that's another good piece of news. So that implies that we will need less debt to finance. And we'll basically say if there is a couple mil shortage, in terms of IPO proceeds, well, we already have, capex subsidies approved to compensate for that. So in a nutshell, we'll still proceed. But then the priority will be to build bar number 4, number 5. And if we don't raise as much money as we need, most likely we'll delay a bit the egg processing part. But the egg production capacities, we'll build them because we clearly do not want to miss out on the 2025 will be the game changer for the poultry industry. So we wanted to deeply penetrate Baltic market and take the benefit of that change.
Just there's 2 million grant, and Mihail's CFO, you can correct me if I'm wrong, but that is actually not a loan that they have to pay back. It's a grant, and it will look like a loan because it will be in the liability of the balance sheet. So you might get, it's like 2 million more loan, but it's actually non-interest bearing liability, which means that the EV/EBITDA multiple is even lower than we have thought.
maybe I just quickly add on for those participants, who are having accounting background, right? Basically, what happens when you are a recipient of EU structural fund, although it is a grant and by nature it's a free equity, you cannot recognize it accountingly speaking as such immediately. What happens, depending on the program, but for us, it's you amortize it over the period of 5 years. So you sort of recognize it as income over the period of 5 years.
I will ask a question from our viewers as well. Is there a risk that mass poultry production will be banned in the future?
I just don't see, how this is even theoretically possible. That would imply that all of us present in this room and our online auditors audience would have to eat grass and leaves, because without industrial agriculture, without industrial food production, I don't know any production method that could satisfy the needs of the population. So there is no other way to feed everybody.
And investor Toomas wrote last week about the APF Holdings, and he had some questions. Mainly, he liked that the company is profitable, but he is worried that it's just, I think it was last year you became profitable. And is it going to last, or is it just for the IPO?
Actually, the answer to that question was also partially covered in our slides, because as you might recall, year 22 was the first year when we had all 3 barns operational. So before that, we were not in a position to have a stable production cyclogram, right? And that would imply that we'll have this, downfalls in the production output, and we have this long periods of change of flock, which resulted in a high fixed cost, but not enough income and cash flow. So now we don't have it. Now we have a stable cyclogram, and it's basically, on our side at the company, the decision to do IPO, wasn't sudden. Our internal logic was as follows: that we wanted to wait for the full year 2022. To see whether the business model is sustainable and we can deliver, sustainable margins and operate with a profit, not even mentioning, the war and all these additional external factors. Then we said internally, okay, very good. We've proven to ourselves and to our creditors, to our banks, that we can do this. Then the other critical milestone, okay, let's do another 6 months, just to bulletproof the business model and show to ourselves and again to our creditors that we can deliver on that. Because also for us, there will not be any point in just doing IPO for the purposes of IPO, because as I've mentioned before, IPO is only 7 million, but our capex is 17, right? So the rest of the money is raised via commercial bank loans. And I think the fact that we have, few offers on the table, and we basically done a beauty contest, between the largest banks, they're willing to finance us. I think that's also should give a very strong comfort to our investors, that we have the means and the resources and the capabilities to implement those projects and, to demonstrate a sustainable business model that generates profits.
I wanted to ask about competition, because you mentioned that there will be a deficit of free-range eggs or let's say non-cage eggs, but other companies see that as well. So what are the other companies doing, and how are you going to be better than them, let's say?
Yeah, I think first of all, let's look at the Baltic market, right? As Mattias also mentioned in his presentation, poultry industry, be it egg or be it poultry meat, it's a very capital intensive industry, right? We have invested over 15 million euros over the last 5 years in the equipment and in the buildings. So our industry has a very high barriers of entry. And if you look at the Baltic egg producing landscape today, you literally have well, pretty much oligopolistic, marketplace where 4 key players pretty much dominate, right? Before APF started, I mean, it's no secret, Latvia's market was monopolized. We had only one large industrial producer. Now, I think we have sort of deserved our place under the sun, but basically breaking into the industry where, nobody expected you, with very fierce competition, with very high capex barriers to enter. So we have overcome that. Now, if you would look at the business models of the 4 key players, number 1 is Baltikovo. Baltikovo is actually the largest egg producer in the Nordics. It's a very large company, very successful, very modern, high degree of automation, robotics. They have reported 102 million revenue last year, and excuse me if I'm a bit wrong, but close to 7 million net profit, right? So it's a solid company that does great. Their business model is export oriented. For them, more than 2/3 of production is exported to other European markets, predominantly Central Europe, and they also do a lot of products, right? They do lots of liquid products. They do boiled egg for Horeca. So it's a fairly diversified sort of egg and egg product business. Player number 2 is a Lithuanian company called Grovart. They are part of Vyšnia Group. You might have seen Vichy crab, how do you call them, sticks in the supermarket. They are also sort of integral part of a large agri-business group. They also have a egg product components in their business. Like Grovart, for example, was very well placed to navigate through Ukrainian war crisis. When supermarkets were pressuring producers to continue to supply at pre-agreed prices. Grovart was one of those who could just, switch to producing egg powder, which has a shelf life of 2 years, right? So they have a slightly different business model, more skewed toward egg products. Now, we are number 3. And number 4 is Estonian company Dava Foods, which is part of very large agri-cooperative, Danish cooperative Dava. Now, what we see is that now there have been some management changes reported, I think, last month, but before that, we have not heard any plans of them, going cage free. And even if Estonian producers say, okay, we're gonna do this, we as a producer know that from the time you decide that you wanna build a new facility, and actually from the time you actually launch it, well, it's at least 2.5, 3 years, right? And this is the gap we have basically to penetrate the Baltic market. So we are quite sure actually that our position in the Baltic is strong. Also, I think I've mentioned that on quarterly basis we purchase Nielsen IQ reports. Nielsen IQ is very well-known retail analytics, and we have seen actually that in some quarters we have up to 35-40% of cage-free egg market share in the Baltics. And this is because, well, I wouldn't, want to clap myself too much on the shoulder. This is also very much due to the extent that the business model of our key competitors in the Baltic is very much skewed towards export markets. I hope that answers your question.
I have, as I have the microphone, I'll ask one more question. It's a little bit different. You mentioned that you have to change the chickens quite often. Was it every 2 years, or how often was it? But my question is that is it only an expense, or what happens to the chickens after you replace them? Will it be sold for meat, or just discarded, or what's the process? Is it just an expense, or is it also some way to make money for you?
I wouldn't probably call it as a sort of a very substantial stream of revenue, because it's not. But to answer your question, yes, at the end of the cycle, we sell the entire flock. And the way it works in sort of industrial scale farming is you can basically not, take birds one by one. There is kind of classical benchmark, if I may say so, sort of internal guidance for a farm manager to liquidate the flock is when your rearing rate is 0.7x per day. This is basically showing you that you are likely to spend more money on feed than your incoming cash flow from the selling eggs is. And basically what we see is that, based on the chicken breed, the length of productive cycle is between 75 to 90 weeks. What happens at the end is, we obviously don't have a slaughterhouse in Aluksnes. Poultry meat is an entirely different business model, different equipment, is actually even much more capex intensive than production of egg. So what happens? Yes, we basically sell at the end of the cycle, we sell entire flock to the meat processing factors. They come with their own tracks. They take the whole flock live birds, and they take them to their meat factories.
I will ask from investor Toomas as well. The company has quite high loan burden. How high is your interest expenses, and how have you mitigated that risk?
Yeah, I will start, and then our CFO Michaels will probably chip in as well. Today we have less than 6 million of bank debt on our books. The debt servicing costs were rather high. That was due to the fact that, as I said at the beginning, when we started, big banks, large Scandinavian banks, international bank, they are quite reluctant to engage because of the domination of large industrial players in the industry. So we had to get our bank loans from a smallish size second-tier banks, where obviously interest rates are higher. What we see now, the offers that we have received today, the interest rate is from 2.8 to 4.0 plus Euribor, obviously. And what is quite typical for an investment project of this nature, well, you have sort of one interest rate during the construction period, but once you commission the buildings, they start generating cash flow, then the interest rate does decrease. But if I forgot something, Michael, please.
Yes, thank you. Probably a few things to mention about the loans. We finalized previous investment phases with a bank loan of 5.5 million currently, and we expect to finalize the next investment phase with 11 million bank loan, which is not much bigger than the previous one. Currently, we also have managed to show this 10 million of revenue, which bring our company to a kind of a large company out of SME sector, which provides lower interest rates that we can handle. And another issue is that the business is capital intensive. We need this capital, and what we can do, we receive this government grant of total 3 million that will reduce our capex and financing requirements. Plus, of course, IPO helps us to finance it partially. And previously we calculated that actually if even we borrow the full amount of investment we need, 17 million, still this bank covenants of debt service cover ratio is in good limits, like almost about 2 multiple.
And do you have any plan on lowering your loan burden, or are you rolling it over?
Well, the 5.5 mil that Michael has now mentioned, that will be refinanced with the facility of the large bank. But what I also wanted to stress, and I think it's also very important for investors and potential shareholders to know, the peculiarity of this industry is that sort of normal payback for this industry is around 7 years. But then on the flip side, the useful life of the equipment is 25 plus years. Actually, Hermanis and myself, when we built the second and third barn, we actually traveled quite a lot around Europe to visit equipment producers and also farms and factories which use state-of-the-art equipment. And we actually visited some of the farms where you have like 25 years old equipment installed and it's still out and running. There are some like X-supply belts, some motors which can be replaced, but the key capex is actually the metal structures of the equipment, which is pretty much galvanized steel, and nothing can happen to it, right? And I think that's a good news, both for shareholders, and also it's a good news for banks that are financing, right? Because basically over the period of 7 years, you amortize your loan entirely, and then basically whatever you make, you don't have to service your debt. It's your net profit.
One more question. How are you protected against bird diseases like bird flu? It's quite a big problem at times. I even remember there's been one case in Estonia this year. So what happens if bird flu is detected in your farm or something like that?
Yeah, bird flu is indeed a key risk that is characteristic to this industry. Now, luckily enough, due to the climate conditions in our region, the bird flu outbreaks don't happen that often in our region. In fact, I don't want to be mistaken for Estonia, but for Latvia, for sure, starting in 1991, since Food Safety and Veterinary Service do the observations, there was not a single case registered in the farm. Now, there are a number of cases, for wild birds and animals, right? And I think there are quite a few cases in Estonia, but there was also, wild birds, not in the farms per se. Now, what happens in the worst case? I mean, obviously, it's a worst case scenario, and that's something you would never want to happen. But in case if for all of the producers, it's not unique. Your flock is insured. Your flock is insured for replacement cost, and you're also insured for business continuity risk. Now, when you when you have to liquidate, I mean, obviously, if a bird flu is diagnosed in your farm, you'll have to kill not in just one particular house, but the entire facility. You'll have to liquidate the flock completely. Now, on the flip side, obviously, because it's a matter of public health and safety, and it's prescribed in European Union regulation and also at the national level, it's pretty much across the board in Europe. The state will compensate you, of course, for the flock replacement. Now, again, that sort of can offset, some of the financial losses, but then again, in order to replace the flock, that's 6+ months, right? Because you need to find it, you need to grow it, put it back, and that would mean that basically for 6 months you're out. That means that your place on the market, on the shelf, will be taken by somebody else, right? So it's a fairly negative scenario. Now, what we have seen, and we are in this industry now for almost 7 years now. We've seen that the outbreak of bird flu is more typical for southern regions, like in Southern Europe, Southwest Europe, for weather conditions, right? And that does happen like every year. You have it every year. Cynically speaking, it also opens opportunities for producers in other countries, ourselves included. And we had it on a number of occasions, say in Benelux countries, on Italy, in particular region, the flock is liquidated, and these are millions of birds, right? That results in a spike, in prices because of the lack of supply. And what producers do, they obviously try to capitalize on it and fix good margins on the spot market. We've done it quite a number of times, and as I've said, it happens every year, several times in different parts of Europe, predominantly in the south. And then basically, what you as a producer trying to benefit are facing. Because obviously, when you have sort of a large fixed contract signed with large retailers, you cannot sort of call, say, Rimi and say, hey, guys, I will not deliver you next week because I want to sell at double price in Italy. You cannot do that, right? So it's always a delicate balance, how you can sort of deal with your existing contracts and sort of try and sell some excess or uncontracted, uncommitted volumes to benefit from that. Now, I also want to capture what we do in our farm now, because it's obviously very important. Actually, 2 weeks ago, we have completed yet again successfully with a great, excellent audit for an additional 1-year extension of food safety and security certificate, which is sort of a golden standard in our industry. And pretty much basically all auditors that visit us, RIM included, they all say that, you know, our animal welfare, biosecurity and biosecurity protocols are by far above industry standards. Like, we are really taking care of that. Now, you know, if Michael or myself, you know, will come to the farm, our chief veterinary will not let us in. You know, she will make us, you know, sign tons of papers that, you know, I was not in contact with with wild animals and wild birds for the last 2 weeks. You know, and even if I would be allowed to go in, I would have to take the shower. I would have to change before I enter the building. I'll have to, you know, disinfect. So, you know, there are various biosecurity protocols in place that sort of mitigate those risks. Also, one needs to understand that actually those farms who do free-range rearing, they are much more exposed to bird flu risks. Because in our case, you know, be it enriched cage or barn, you're essentially speaking of sort of sealed compound building, right? Where the only, you know, live beings that come and go are human beings, right? And if you have, you know, proper management, biosecurity protocols in place, then you kind of put those risks to the minimum. Now, if you are a free-range farm, there is no way you can sort of limit or prevent, you know, contact with wild animals. So from that perspective, free-range farms are much more exposed, and those risks are much higher. But as I said, so far Baltics were sort of saved. There were no major outbreaks registered at any farms.
Hello. How much did you increase your egg price last year? Approx.
Probably Michael will give you the more precise number, but basically what we do, I wouldn't say that there was a very substantial increase in our price. What we see quite often, and actually even more so last year, we had a number of calls from our clients saying basically, what is happening? I can no longer afford to buy your eggs. Well, the problem here is that, you know, unfortunately, you know, it's not the producers, you know, who decide, you know, what's the price that the egg is sold at in the supermarket, right? And what we have seen across the board, that our prices to retailers, you know, might not change at all, but, you know, the retailers would still, you know, increase their margin. There is nothing we can do about it, and it's basically kind of accepted as a rule that, you know, retailers, especially for, you know, producers like ourselves, they put a margins which are much higher than producers' margin. That's just how it is. But I'll let Michael to give more exact numbers.
Yes, another issue to understand that, of course, the prices have changed during the last year, but it wasn't kind of our willingness to rise the prices. Yes, the market have changed due to this issue that happened in Ukraine. Yes, in the beginning, so all the commodities have grown. So our prices was rising just to meet this growth in commodity prices. And in terms of numbers, okay, it was about like 15%, but it's not a profitability. It's just a new normal that market have shifted after these issues happened in market.
What was your revenue increase in 2022 against 2021? I think your production volume was same, 115 million eggs.
No.
Was it?
In 2021, we had much lower production because we was running only on 2 barns. And in 2022, we had 3 barns running.
Okay.
So the change also happened due to the production volume grown.
Do you have some kind of slide with like 5 years balance sheet or income sheet or forecast for the future?
On that last one, and then I hand over microphone to Mattias. And obviously we have, but I guess the problem is that legally speaking, in prospectus we can only speak of 3-year horizon, and that's what the prospectus is about. And on our website we have. Yeah, but I mean, obviously, all our financial statements for previous years are publicly available. But yeah, as our legal advisors say us that we have to provide equal amount of information to all investors.
Yeah, I think if you check the research that we did, you will see that historically the prices went from about 10 cents per egg to 13. So I think it was 13 in the half year as well. Reported, and we have estimated 13 for the full year this year, 13 for next year, and 14 for 2025. But you have a table with like number of eggs per hen and everything in the research, so you can kind of decide yourself if you believe it or not.
Okay, and what's about this dividend policy? Like in 26 years, you said you will bring this half of profit for dividends. But if this IPO is successful, then I think your loan amount will be around 15 mil. And if you 7 years maturity, you have to pay back like 2 millions per year plus interest like 1 million. This is like 3 millions already. Is it possible? With income, maybe, but income is not cash in your balance sheet. Can you pay out like half of income?
So target bank loan portfolio is 11 million. And what we have received a proposal from banks currently, we have from 5 to 10 year of repayment schedule. Yes, so it can be from 1 to 2 million payments per year. And we have shown our forecast EBITDA at around 8 or 7 that Mattias has calculated. So we believe we can manage this.
Okay, and you can't see any problems. We sell higher with free range eggs, like 20-25% higher price in markets, and you don't see any problems to achieve that selling goal.
No, it's basically already happening as we speak. That's basically the industry norm, and yeah, that because of obvious reasons, because it's cost 30+% more in terms of capex, and basically that's what you as a producer transfer to the consumer, right? Because the production is more expensive, and obviously you want to get premium for that. Retailers are okay to pay that premium. And I would even go more and say that, I mean, obviously it depends on the retailer, but in some of the supermarkets, you would see actually that the premium or on barn and free range as compared to cage is actually much, much more than 30 or 40%. Sometimes it's double.
But the customers still have a chance to choose between cheaper or higher price.
They have, obviously, and that's the reason why for the time being, at least until it's a mandatory decree by the legislator, we still keep 1 cage enriched cage facility, because obviously there will be a group of population which will prefer the cheapest product. So we'll still keep that in our portfolio for as long as it's economically viable. But then also, also at the consumer, I just don't see, how this, big international retail names, and some of them are publicly listed companies, I just can't visualize how they would go out publicly and sort of, call back their public commitments, on ESG, increased animal welfare. I just don't see it happening. So the trend is there; it's in the motion. Increased animal welfare standards are something retailers have already publicly went for. So I think what we're going to see in the market that this big international retailers they will do that, and you'll have the sort of second tier regional supermarket chains which most likely will continue to sell cage, enriched cage, for as long as legislators will allow it to happen.
Are there any more questions from the audience? Then I will ask about the risks. What is the biggest risk in your opinion for the company?
Yeah, I think we have 12 or 14 pages of risks in the prospectus, carefully written by our investment bankers. But if I would have to sort of single out two, one of them was mentioned. That's the bird flu. I think that's sort of the worst there is, because that would imply that you are, as a producer, out of the business for at least 6 months. But as I have said before, I think we have a very proper, strict biosecurity protocols in place to mitigate that to an absolute minimum. The second biggest risk is a commodity fluctuation risk, because in our industry, 50 to 60% of the cost is a cost to produce feed. So one can also say that your feed mill actually is sort of a profit center, if you like, right? Because it sort of has this very substantial impact on our net profits. Now, what you see, obviously, based on the size of the production company, companies opt for different types of instruments. You can hedge commodity prices. You can if you're large enough and have working capital, you can buy a harvest for the whole year to keep you going for 12 months. And we have examples in our industry of companies doing that. So far we have opted for a sort of a very pragmatic approach. What we have done is basically, obviously, we fix some prices and volumes during the harvesting period in August, September. We normally, based on the market sentiment, we go for 20-30%. Then again, based on the market sentiment, sometime in November, December, we sort of go and shop for another 20-30%. And then our experience also shows us that basically in May, June, most of the commodity traders, large companies who are in this business, they're very keen to empty their warehouses, in anticipation of new harvest, and that's mostly when you can also, good deals and good prices. Now, I mean, during the last 2 years, we also been quite well placed to despite the ongoing war, we had sort of a good established relationship with a couple of Ukrainian suppliers who are managed to establish a warehouse in Poland. So we had this inflow of Ukrainian grain as well, which we predominantly are able to buy at a much cheaper prices. But then again, because of the war, these supplies are unstable, and they're sort of spot nature. So on all, I think basically these two risks are the key risks I would highlight. But as I said, I think we so far have been quite successful in managing them.
And I have the same question to Mattias as well. Through investors' eyes, is the risk the same, or do you see some other risks for investor?
Yeah, I think operationally the risks are of course the bird flu is the nightmare year for an investor. When that news comes out, of course the share will come down. So as an investor, I think that is the biggest risk.
And what about the economy today? Do you see any risks from there that the investors should be worried?
That's kind of what I think I addressed in my short presentation, is that it's nice with this that you don't have this demand falling off the cliff risk in this, because when you look, if you were doing organic tomatoes or organic avocados, people obviously don't buy that anymore. It's even hard to find in the stores, at least in Estonia. So that was a risk, but I don't think the risk is that people will go back to barn eggs to cage eggs. I think the premium in absolute euros is so small that I think the population that will be forced to do that is so small. So I like that risk is not present, which is the risk in all companies that have performed well so far this year. you have this demand risk. Will it last another year, or will it end one day? And that is what I like about the eggs as a product. It's not what you cut back on as a family.
Good answer. I see one more question.
I would like to ask regarding the whole market situation. Why did you choose to turn to public money or go public versus having private equity, private investors?
No, as pretty much every more or less successful company in the production space, you get approached by private equity guys now and then, and we were no exemption. Private equity guys, when they come in, they want one thing. They want to make a lot of money relatively quickly, help you to fix things, and then they either exit or bring you public and then exit. And for us as a team, we pretty much did not feel that a private equity fund would sort of bring something that we cannot deliver ourselves. Because, as I said, we're all former bankers. We have done quite a lot in corporate turnaround space before, so we didn't really feel that private equity would add much. So for us, it was more. And obviously, we could implement this program ourselves, right? It would take 3-4 years to complete, and now also for me as a shareholder, I've invested quite heavily in this business already. And as I've said, yes, if we would implement this program ourselves, it would take 3 to 4 years, but we want to do it within a year. And the reason being, this fundamental switch in 2025, and that requires more equity capital. And we've kind of felt that we are ready, as a team, as the company, looking also at the issuers that are listed now. We felt that this business is ready, and we should do it. We should do it now.
Thank you for those answers, and I think it's a good time to end our Q&A session and enjoy some food and smoothies, egg smoothies. Thank you very much. Let's give a big round of applause. And we have some gifts from investor Toomas as well. Here we go. Thank you, everybody who came here to see the presentation and who watched it at home. I hope you enjoyed it, and there is a lot of things to think about before subscribing to IPO. Thank you.